So is this above your internal expectations?
Yeah, so the numbers for this quarter definitely look a little bit better than what people were expecting. I'd say there's a few numbers that jump out at me right off the bat. Number one, the adjusted EPS number, I think the expectations were for 9 cents, so clearly the headline number is a little bit better. And really there's two key issues with this company, two key challenges that everybody's focused on. One of them is the performance of the power segment, which has been the big drain on earnings and cash flow over the last couple of years. I think the street was modeling a loss of over $200 million for that segment, and it actually looks as though the segment posted a very slight profit. So that's a little bit better than what people were expecting. The other big issue with the company is the balance sheet, and I think everyone's paying very close attention to the cash flow generation. Now, there's seasonality in this business, and we know that this is going to be a weak year for cash generation, but the expectation for this quarter was actually a cash burn of about $3 billion, and it looks like the adjusted industrial free cash flow was I believe negative 1.2. So it's coming in significantly higher than what people had feared for this quarter.
Even though it's negative for the year, still looking at $2 billion of negative cash flow, and then like this company doesn't have enough problems. The 737 MAX grounding is a new risk for us. And we are actively monitoring the situation. That's in their outlook for 2019. They saw fit to actually mention the 737 MAX, and that could actually impact their results at some point if it, I guess, continues at longer than expected.
No, it could, but without commercializing the tragedy of the 737. I think what is interesting is the company has already articulated the fact that 2019 is going to be a challenging year for them. So. Everyone should be aware of the fact that they're the sole source supplier of engines onto the 737 MAX, so it's not a surprise that if that fleet is grounded, there could be some impact in the near term. I do think over the long term, this is something that will likely get worked out. But what's I think particularly interesting about this earnings report, just from reading the headlines, is there's, I think, a lot of fear around this company that maybe management didn't yet have a handle on what some of the issues were that have been impacting them over the past couple of years. And the fact that they are coming out and reaffirming guidance today, and the fact that this quarter, while it's certainly not a good number on an absolute basis, but they seem to have a grasp around what's going on, which is maybe a little bit reassuring.
Right. So a year from now or whenever you could look back and say, this was Culp slowly, methodically, doing it in piecemeal fashion, what he needs to do to get this company back on track, and you'd say this was probably will be remembered as a positive data point in the company's transformation. It's going along as expected, and,
right.
And it's positive.
Right, and what's I think important to keep in mind is the numbers that we're seeing are oftentimes in a business like this a reflection of the operational decisions that have been made over the past couple of years. So what Larry Culp and what the management team have told the market is 2019 is not going to be a good year from a numbers perspective, but they're instituting some operational changes currently to try to drive better performance going forward.
It is about cash flow, though, and it is about asset sales. That's really where the focus has been, and it looks like that's staying the course, right? And power is one of the bigger challenges that they still have.
Correct. So in the power business in particular, the way that business operates, they're completing multi-year construction projects. So decisions that have been made over the last couple of years as far as where they price those projects and how they've executed on them from an operational basis is what you're seeing in the numbers today. Now, what's going to be interesting is to see how this progresses over the next 2, 3, 4 years as they start cleaning up some of the historical mistakes that they've made in that segment.
Dan, you guys bought $250 million worth of GE stock back in December. I'm just looking at the ticks. It was anywhere from as high as $7.81 to as low as $6.71 in December. You look at this today, and it's trading up another 6.5% to $10.32. Are you long-term holders, or would you look at this and say, okay, we're going to declare victory and get out?
Not even close to declaring victory to get out. So we are very long-term focused investors. In general, that's our strategy. We tend to invest with a 5-year look into the future as to how we think a company
Dan,
will perform.
This guy over at JP Tusa, he's going to see these numbers today. He still was talking about retesting some of the lows. Do you think that this will cause him? You don't need to speak for him, but is this a strong enough performance where he starts to question his bear case at this point, would you say?
You know, I have a tremendous amount of respect for Steve. I think he's a great analyst. It's not really my place to speculate as to what he may or may not think without having read it.
It sounds like, reading between the lines, you're saying that this is showing signs of turnaround.
I think it's showing signs of stability. And you know, I think, like anything else, the devil's in the details. So one thing I really admire about Steve is he'll take a very close and detailed look at these numbers over the next couple of days, as will everybody else on Wall Street, and we'll see what comes out once we dig a little bit deeper. But I do think the fact that the company, at least for this quarter, seems to have a handle on what some of the risks are. They've at least appropriately, they believe, forecasted their business for the year. You know, that's something that hasn't really happened much over the last couple of years, and may help to give some reassurance to the market. But as I mentioned, really what will be interesting to see is how this business starts to operate once some of the historical mistakes are no longer running through the financial statements. That's not happening in 2019. Right. And we actually, not only is it not happening in 2019, the company has told us 2019 is going to be some of the worst of the prior mistakes. So, you know, the numbers for this year are interesting to look at, to track as far as making sure management has a good grasp on the business. However, nobody should be investing in this stock because they think 2019 is going to be a good year, particularly not the first quarter of 2019. It's a very lumpy business. Really, if you're investing in this stock, it should be because you think there is material earnings power once they get past some of the issues that have been running through their financials from the power segment.